we are in the QBO gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's go ahead and get into today's exercise, which is being pulled from our November Year 1 cardio section. At the top here is an animated video to give you an understanding of what you, the bookkeeper, will be doing for your client Craig this month. Below that is an interactive pre-assessment quiz that relates to the video up above. Below that are the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises in this section and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise where we're going to practice correcting the loan. Go ahead and click on that link to have the exercise come up for you. I have it here on the right side of my screen, so let's read through the scenario. Craig took out a $25,000 loan from the bank. His previous bookkeeper supposedly entered it in QBO, but Craig cannot see it in his checking account. Follow the steps below to find out what is going on with the loan. Now, you will need to be in the sample company to do this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company here on the left side of my screen. Once you sign in, this is what it will look like. This is the dashboard. So let's go ahead and get started with the exercise. We're going to get to the chart of accounts by clicking on Accountant Tools and then selecting Chart of Accounts. So Accountant Tools is on the top of the screen. Click on that. And then under Quick Links is Chart of Accounts. Now, scrolling through the list, you can see that there is a notes payable account set for $25,000. So if I scroll down here, it's under the other long-term liabilities, and it is a notes payable for $25,000. Now, this is strange because the term notes payable is typically used to refer to the transaction on the bank side. The recipient usually refers to it as just a loan, but it was set up as a long-term liability right here, so that much is correct. We're going to follow these steps to see what's going on. Let's go ahead and click on View Register on that line right there. And you may need to close some pop-ups if you get them before we can continue on. All right, so here you can see that the account was funded using a journal entry. So we'll need to check into those details. Let's go ahead and click on Split, which is down here, and then click on Edit so that we can see the transaction itself. Now, the first part of the journal entry is correct. It credits the notes payable account, meaning it increases the amount of liability. The second part, however, is not correct. Opening balance equity is used when you or QBO do not know precisely where the money went. This is typically seen, for example, when converting from one accounting software to another, or from another accounting software to QBO. In that situation, you may not convert the details of every transaction in QBO because they are already recorded in an old system. But that is not the case with Craig. Craig deposited it into his checking account. So the only adjustment that you need to make here is to change the account. So in the account field on the second line, we're going to select checking. So click into that, click the down arrow, scroll back to the top, and you will see checking, the bank account. Go ahead and click on that. Now let's go ahead and add a memo here just so we know what this is about and why the change was made. we're going to type change the debit account to accurately reflect the deposit. So in this memo field right here, delete what is currently there. And then I'm actually going to just highlight over this text to make it easier and copy it and then paste it here in the memo just to speed it up a little bit. Feel free to do the same. And now we're going to go ahead and click on Save and Close. That's the down arrow right here. Click on that and then click on Save and Close. Now, QBO is giving you a warning that you are changing a transaction that has already been reconciled. Opening balance equity transactions are always automatically marked as reconciled. However, since you have not actually reconciled the opening balance equity account, this will not affect you. You will eventually have to reconcile the deposit to the checking account, but that's not what this message is referring to. So go ahead and click on the green Yes button. And now that journal entry has been updated and saved. Now, this scenario was a bit far-fetched. Craig could not understand why the money was not showing up in his QBO checking account. Since he had deposited the money, it should have shown up in the bank feed transactions, and in a real-life scenario, he or the bookkeeper would have noticed this. Also, they would not have been able to reconcile the checking account if they had not tracked it down. The real purpose of the exercise was to demonstrate how an incorrect journal entry can cause problems and how to go about fixing it, as well as to highlight the incorrect use of the opening balance equity accounts. Once the loan is set up, a good next step would be to set up a recurring transaction to record the principal and interest payments each month using a journal entry. Now that you have spent a great deal of time practicing recurring transactions, you may be able to do this on your own, but that's outside of the scope of this exercise. But that's it. That's how you would correct the loan. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We're going to continue on in the cardio section with our next exercise where we practice paying the bills. And I will see you in the